Hello guys, welcome to the Trading Parrot. Very time sensitive information I'm bringing you today. As soon as I woke up this morning, I was sharing with you guys on Telegram and Twitter that Bitcoin was breaking down from the squeeze. And at the moment, that move of the price down is threatening also to lose the bear flag, the larger bear flag on the 4 hour. In today's video, we're gonna discuss how low I'm expecting that to break down if it's confirmed. But I also wanna pull out of my sleeve a last resource for Bitcoin to still push up and break out to the upside. I give that low likelihood of happening, but I want you to be aware of that in case this turn out to become a bear flag. We're gonna distinguish between those two alternatives, the confirmed breakdown and the reclaim and potential new highs incoming. I'll give you my take on which one I think has at the moment highest likelihood. Let's break it down. Guys, if you want to trade on a non-KYC exchange, Bluffin is currently offering 10% cashback on any deposit. This is just for the first 50 users, so be quick, the link is in the description. By using that link also, you trade with the lowest fees on Bluffin. So 2 hours ago, guys, I was posting about the breakdown, about the CME gap. Indeed, 3 hours ago, to be more precise, I started making you aware. And in yesterday's video, we talked about this symmetrical triangle and how likely it was going to be that there are fake outs. I remember being very clear with that and saying that I much rather looking at the daily these days. You can see one attempt to break out to the upside, second attempt, both of them failed. At the moment, the candle is pointing down. Have we confirmed the breakdown? It's very likely that it's confirmed, but as usual, knowing that the 4 hour is such a bitch these days, I have to challenge it, even if I end up thinking that it's going to break down 60 to 80% chances. Interestingly, 1 hour ago, so 2 hours post the initial breakdown from the flag, they already have an article that was bearish right there to get everybody scared. Bitcoin macro index bear signal puts 110k BTC price return in doubt. Bitcoin price metrics taking an extended break from bullish upside is not great. The creator of Bitcoin macro index says, but hope remains for a comeback. The Bitcoin macro index created by Capriol in 2022, remember Capriol? I think that is the creator of hash ribbons as well, uses machine learning to analyze data from a large number of metrics that the founder Charles Edwards says give a strong indication of Bitcoin's relative value throughout historic cycles. You can see in here the indicator. I don't doubt that Capriol knows what he's doing. I just find interesting how timely over and over again when the price goes down, they come back immediately with all these articles saying that is the end of the cycle. And wherever the price goes up, suddenly they have the best arguments to say that we are going to a 1 million Bitcoin. Just stay away from that. We are just looking at the data. I'm not convincing you that this is the case. I'm just saying be aware of all this manipulation. What they're pointing out is that there is a trend line support in these two cycles with higher lows, whereas you have lower highs in the Bitcoin macro index, which you can see in here. And I'm just gonna show you something that they don't say in the article, and neither Capriol is observing. As far as I can see, he didn't put the line in the counter argument. Can you spot it? I'm just gonna give you 5 seconds. 5, 4, 3, 2, 1. Look at this. You have that bearish divergence between these two peaks that are higher highs, lower highs. If you go to 2017, you can see this peak versus this peak. This one is lower than that one, right? Just like in this cycle, just like in this cycle. So if we were here, what's going on with the index? The index also has a bearish divergence between this peak and that peak. What happened after? Well, the price went from 4K to 20,000. So you have a perfect counter argument as well to say, well, this hasn't necessarily always played out. But they don't say it in the article because the article is well targeted and timed when the price is correcting to get you scared. Anyways, let's move on from that crap. Let's notice that in just a couple of hours, we have the core PCE price index incoming. There's an expectation of it remaining flat, a 0.3 on the month, the personal income to reduce from 0.9 to 0.4, and the personal spending to increase from -0.2 to 0.5. Let's see what are going to be the numbers that come out. We can see that the global M2 has taken in here a retracement. Less liquidity in the system is not great. We have a huge rally in here, but in my opinion, all this leg up in terms of Bitcoin price hasn't been priced in yet. We also see that in China, the liquidity is increasing. The Federal Reserve balance sheet took also a small tiny micro dip, just like this one. So let's hope that after this, we continue going higher. My expectation is to see in here some sort of larger pullback to keep the uptrend steady and healthy. All right, let's go to the 4-hour before this becomes too late information. We have this symmetrical triangle, right? And the RSI broke out to the upside with this wick, but the price didn't follow up. It was looking really promising last night, but I still made you aware that the 4-hour can produce fake outs in this area of the squeeze. We were in the squeeze, we observed, and we have a strategy that incorporates these potential fake outs of the price. It was confirmed right there at support, then it tested the support at around 1 a.m. At that time, I was already asleep, and at 5 a.m., between 1 and 5 a.m., it started losing the support with the price, and not just losing the red line, but also pinching below the support of the full move up in this channel on the 4-hour. That is not what we wanted to see for a breakout towards 89. Last night, we made it very clear. With these signals, once we have something settled with a retest, then we can decide direction. We also knew from the order book that there was not much alpha to use for an entry for a long. Just the momentum was pointing out a breakout in here, but the rest of the indicators, we couldn't find really anything that said this is extremely bullish. The only thing that we found yesterday, which I promised I was gonna touch base today, is the net longs shorts delta, which you can see a vertical line in red every time that we dip and we enter in the value area. The price started pushing back up, and I have to tell you now, guys, that we are precisely at the value area. Can we go lower? Yes. For example, in this area we enter, we pinch it, in here we also pinch it, and that process of pinching that line, if we do it, could be just enough to hit the CME gap or to hit the 83k liquidity that we are gonna review just in a second. We are in the area of value. This could potentially in the next 1 to 20 candles in the 4-hour time frame where we are eventually start pushing back up. The strategy says that we look for longs in here. Basically, we need to start looking for other alpha to contrast with this to look for a potential swing long. So that's what we are gonna do, but we're gonna go with discipline, looking at everything we got, including the daily time frame. So let's stick to the 4-hour, stick with me, and let's understand what could happen in here to actually trap shorts. We need to be now devil's advocate. Remember that the high of this triangle is more or less like this. In this breakdown, it's pointing towards 84.3 that closes the CME gap. So that is the bearish scenario, right? We close the CME gap, we keep a candle 4-hour close below this area, then the retest, if the price doesn't manage to re-enter above 85,400 and it becomes resistance, that's where we can start talking about the target of the bear flag towards a lower low around 75, 74k, right? But one step at the time, let's not rush anything, because this could perfectly turn also into a bear trap. How is that? Well, we're too focused on the symmetrical triangle, but if we make this, instead of being a symmetrical triangle, we turn it into a bull flag like this, and the price in this current candle or in the next maximum pushes strongly back up above 86, 87k, then this whole move in here is just gonna be seen with a candle close above this. It's gonna be just seen as a liquidity hand. It just wanted to trap further shorts in here to then continue to the upside. Watch out with that, because the only way I see that we can re-enter and actually break out from the upside and then see that the net longs, shorts and stuff play out right from now is that way. If it takes longer and we do something like this and we put a new low and stuff like that, then we go to the CME gap, potentially we even go to 83k to grab that big liquidity, then it's a lot more difficult for price to really recover, because we get into this area of here, 83 to 82,500, and it looks too much like a breakdown from a flag like this. We are there playing with fire to continue to the downside and put a new low. That is just my opinion. Whereas if we do a quick recovering here and we exit from the top of this flag, then we have higher chances that we hit 89. We also have to see today, and I shouldn't forget, is to look how is this increasing with this drop down. Is it mentally increasing with tons and tons and tons of shorts? Let's look at the delta and all of that. Let's see also the bid liquidity, how much people are coming in here to buy this dip. All of that does matter. Okay, let's move on to the daily. Let's make it quick. 45 RSI support is still holding. We are right there at 46. So we are getting very close to that 45. Remember that a test of 45 in the daily constitutes just a very mild pullback. If we go beyond 45, that's where we start entering in the gray area. And also remember that here we are talking about daily time frames. So we can even go to 40 intraday, come back above 45, and you're going to see the candle close and the RSI closing at 45, and then say, hold on a minute, we went to 40. Didn't you say we have to hold 45? Candle close 45, being at 40 intra candle is painful to watch. It tests your psychology, your patience and everything, but it's not yet a breakdown. Of course, you play with stop losses and stuff like that. You never keep the position without any risk management, just looking at the 45 being lost, going to 40, could go to 30, could go to 20. That's a separate discussion. Risk management is one thing. Taking decisions intra candle, if you're trading the daily, that is just lack of discipline in my opinion. So far we are holding that 45, so daily is doing something that is allowed to do. We are now below the 200 daily moving average. That potentially has an effect of freaking out a lot of people. I'm gonna very quickly answer one question that I found really fair from someone in the comments, saying that my trend line in here is inconsistent with my trend line on the 4 hour, and that is just a consequence of being two different time frames, my friends. So what I use, personal taste in this case, is I use the candle closes, the bodies of the candles, as the best suited touching points for my trend line. So on the 4 hour, as a consequence of that, I get the line like this. On the daily, I'm trying to respect those bodies in here, so some of them are slightly above and some of them are touching wicks in here. I try to find a compromise, like I could place this touching that body, and then if I touch this one in here, I miss that one. So it's always a very close and personal way of seeing things. I'm just gonna stick with this because I really like the fact that it touches the top wick. That is my preference, but of course you're welcome to do it in any way. Just to clarify the question, I'm not aiming to get consistency of the lines between 4 hour, daily, weekly. My personal preference is that each one of them have their own personality based on bodies, wicks, and my personal taste that I like to meet that point, the beginning of the move down. I give it good value as well. Anyways, on the daily, we are coming back below the trading range of the daily. So in theory, a candle daily close below 86.4 is not great. It's a rejection. Second one, to reclaim the daily range. But if today we recover above 86.3, it's gonna be extremely bullish. We're getting very close to our 84.100. We are 85, just 1k more, and we test that final 45 RSI support, and that comes from this channel on the RSI. Remember that if we go slightly lower, even on candle close, that is still a higher low, although we are starting to be in the gray area, whereas 45 is a clear test of just daily support. If we lose, in my opinion, the 84.2 on a daily closing basis, and we start spending too many days in this area in here, we are risking on the daily that journey to the bottom of the wedge, which is no longer in here at 76. It should be something more towards 74 because, well, price can fall a lot on Bitcoin, of course, but you can see in here that even this very deep fall took 5 days to get there. So from today, 5 days meets with the line around at 74K. To meet with the line around 74.9, which is the closest to 75, we need to fall in a single candle. And if you look at past performance, that is very difficult to achieve. This only candle in here is a candle of 1 day with $8,000, but we need to go 10K.5 down to meet with that line. Just doing some calculations, that's not the forecast. The forecast is based on how we close the price today. There are no forecasts that are static in this channel. I will never say we are going there, we are going up, we are going down. If you are waiting for that, you need to watch more the channel, get yourself educated on how to read the markets, and eventually you're gonna understand that different mindset. You need to shift away from certainties and embrace the uncertainty. Once you fully acknowledge that and you make it part of your plan, that is when you start having better chances of becoming a good trader. The bull market support band on the weekly is rejecting the price. We are intra-candle, of course, but that is how it's looking on Friday. On the weekly RSI, after we reclaim this yellow line in here, we are slightly now below it. And this resembles around July in 2024 when we also lost the first line of defense, which was the boss line. We used to call it like that all the bull market up until June 2024 when we lost it. What happened after? In 1-2 weeks, we reclaim it, but for very little. We spent 1 week above it, 2 weeks above it, and on the third week, we came back to 48. I'm not saying that's gonna play out, but I'm preparing you for the idea that Bitcoin is capable of doing something like that, in which case you lose 50, 49, and hopefully we do also get next a higher low, maybe around 46. And 46 at the moment is around 82K, we could say. Notice this green line was placed at RSI 50, but actually our resistance was 49. So let's correct that. And that is the resistance that we claim for 1 week, and right now is kind of rejecting us. We were above it up until 88,700, and then I made 100,000 videos talking about 88K, the big challenge and all of that. And this is how big the challenge it was. Not saying we lost the challenge, that is to be defined, we could say, but it has been so far a big challenge. CPR as well, the middle pivot, 3 days of rejection, and now we are battling to hold the last pivot. CPR model says 74. We'll see if CPR model is correct this month or if we reclaim and we go with the plan of the 4-hour turning into a bull flag, which, by the way, I didn't give you the target of the bull flag. So this is the bull flag on the 4-hour. So if we reclaim from here, we can hit 90.5. That, in my opinion, now has a diminished likelihood of happening because we already have a candle close here below on the RSI that is a breakdown, which means that now if we rally into resistance, we are going to meet with the resistance at 54, and that is a speculative number as everything else in the channel pretty much. And a rally into resistance takes us into 87,200. So in order to fulfill this full target of the bull flag, we first need to reclaim 54, which is by itself already a challenge, right? We lost the red, we lost the white, and we need to go to 87, hit this 54, reclaim, and start going up. For that, we do need some very bullish news and the general markets ripping off the resistance to convince us that this was just a fake out to trap shorts. And one way to achieve that is that Trump says, you know what, tariffs are not such a great idea. Maybe we should discuss things with other countries, have a little bit more of dialogue and less of threatening other nations. And I think that the market will love that. As a trader, I will love that as well. Actually, as an investor, as a trader, I really don't care. And here we are very close to the CME gap. We are just a few dollars away. Bitcoin is hovering around 85K on prices on Binance. We start from 84,900 up until 84,200. and we need to really speed up this video. You can see the leverage squeeze yellow signal so far has moved down 3%. Very crappy performance so far, but it could get better with time if it plays out. Long-term holders continue to accumulate. That means that they are liking this dip, but they've been liking all the move from 77 into 88, and they've been accumulating all those levels. So I'm assuming they already have a position and probably is in the break even or slightly in the red. Big whales are also still accumulating. I still don't see anything worrying. ETFs, very small, very slow, but they are accumulating. We are back in the fear. Liquidation levels, we seem to be going for this area of 84,600 that ends at 84,400, overlapping with the CME gap. But let's remember that the largest is 83. Yesterday, we have a difference in here. One model was saying that 89 is larger, but I remember telling you that I trust more the heat map from CoinGlass that has confluence with what also is shown here as larger liquidity. So in my opinion, that 83 is heavier. Now the trend direction strength is showing a strength of 3, bearish. The heat map shows 83 as the largest. There is a vacuum where we are, so we are not really hitting that much liquidity at the moment. Unless we get to 83, then we hit big liquidity. So one potential outcome to consider is that price goes to CME gap, and if things continue bearish, let's say there is the PCE meeting and disappoints investors, that could help the price to go further beyond into 83. We also say that we were going to look at the liquidity on the top end to see if it's increasing, and it's going to be a little bit tough to see in this area. I don't see anything really new except for 3 a.m. on the 28th. So this level in here is new. These ones are new. Those are from 27 appearing for the first time. This one appeared at 2 a.m. at 90.175, and you can see how we are spilling some olive oil in all this area to cook those dirty, unhealthy eggs in the pan. But apparently, thanks to the breakdown, market maker at the moment is consuming what is in here first. Let's update this. This is the data from yesterday, how things are increasing. That 83,300 is this high from the past 30 days. 89 is still higher. If we get to 89, the cumulative is 3.1 billion. If we get to 83.3, the cumulative is 2.2. So there is again that discrepancy. It says that it's much worth it to go to 89. So I guess the general markets and the tariffs are starting to price in so those fears, and that's why we are moving in this direction first. Let's look at order book, and we are starting to see in here some increased appetite from orders wanting to enter. We have a 16 now. That is very interesting, right at the 85. That has now decreased to 0.09, which is also bigger. As soon as this flip red in here, they started selling. That happened at around 8 p.m. slightly after I shoot the video where I was saying that we have all the time this bidding, and as soon as probably the video went out, they flip into ask. Longs are coming back. So we were at 44, and I was moaning that that is not going to be a great area to buy. It's an area to sell. Each of these dips of 46 were also local tops. This 50 was also a local top, and now we are starting to see an increase in longs. It's at 62, but areas like 68, 70s have been great areas to re-enter the market. It's not always the perfect bottom, like you can see here at 80k, at 78, and then at 76. That was a great area to enter, overlapping with negative funding rates. You can see in here as well, high block capital is showing that 76k as an intense area of liquidity of the past month. And the last thing that we're going to review in the charts is the fair value gaps. As you can see, we have a huge fair value gap from 85,400 into 86,900. If we start retracing back up, that could be just enough to reclaim the lost support in here on the 4-hour and to potentially create that scenario where we still rip off to the upside into the 90s. Remember that the 4-hour has a confirmed breakdown in here, so that reduces the chances that we can really do such a thing. We have that resistance at 87.3 if we now rally as a revenge rally. Thanks so much for watching, and I'll see you on the next one. Take care. Bye bye.